Today, we are diving into a true trading classic, Long-Term Secrets to Short-Term Trading by the absolute legend Larry Williams. And we're going to unpack a really counterintuitive idea. To win at the super fast short-term game, you first have to understand the big long-term picture.
Right out of the gate, Williams just throws down the gauntlet with this quote. He's basically telling us that most of the conventional wisdom out there, the stuff you see in books and courses, is just plain wrong. So his message is clear. Forget what you think you know. We're about to look at the market in a completely different way.
And this leads us to the central puzzle of his whole approach. I mean, how can looking at the big picture, these massive long-term forces, help you make money on a trade that might only last a few minutes or hours? It feels totally backward, right? But stick with me, because this is the absolute key to everything. So, to solve this puzzle, here's our game plan. We're going to break down the 5 pillars of his strategy. We'll start with the paradox itself, then dig into the market's real structure, uncover the secrets to timing your trades, get the rules of money right, and finally, reveal the one ingredient that makes it all work.
Okay, first up, the trader's paradox. Williams says the #1 reason most traders fail is that they are totally glued to their short-term charts. They're staring at the 1-minute chart, reacting to every little tick up and down. They're completely lost in the trees and have no idea what the forest around them is doing.
And here is the core idea. Those little wiggles and jiggles on a short-term chart, they are not random. Not even close. Think of it like a volcano. For weeks, maybe months, pressure is building deep underground. That's the long-term trend. The huge eruption that happens in one day, that's the short-term price move. It's not some random event. It's the direct result of all that pressure that was building up in secret.
All right, so if these short-term moves are all about long-term pressure, what's creating that pressure in the first place? Well, that brings us to our second pillar, understanding the market's true structure. This is all about figuring out who is really in control of the market and what they're trying to do.
This is such a great way to see it. The amateur trader looks at a chart and just sees a random squiggly line that jumps around based on news headlines, fear, and greed. But the pro, the one who thinks like Williams, sees a story unfolding. It's a story about smart, informed players who are systematically buying at the lows and selling at the highs.
And the 2 key chapters in that story are accumulation and distribution. Accumulation is simple. It's when the smart money is quietly buying everything up from the public who are panicking and selling at the bottom. Then, distribution is the exact opposite. They turn around and sell all that stuff to the euphoric public who are scrambling to buy at the top. This cycle is the engine that drives the markets.
So who is this smart money? Williams calls them the commercials. Now, these aren't speculators like us. These are massive corporations. Think a farmer hedging their wheat crop or an airline locking in a good price for jet fuel. They're using the markets for their real-world business, which makes them the most informed people in the room, and their behavior is super predictable. They buy when things are cheap, and they sell when things get expensive. Simple as that. Okay, so now that we know how the market is structured and who the big players are, we can get to the fun part. Timing. This is where we learn how to pinpoint the exact moments to jump into a trade. And it's not about complex formulas, but about recognizing really simple patterns.
The whole philosophy here is about simplicity. Forget about having 20 different indicators on your screen. Instead, Williams says to look for moments where the market tries to do something and fails. That failure, that little crack in the armor, gives you an incredible clue about what's probably going to happen next.
And this is one of his most famous patterns, the oops pattern. Picture this. The market opens way up, creating a gap. Everyone gets excited. Buyers rush in thinking, this is it, we're going to the moon. But the excitement fizzles out. The buyers can't hold those new highs. And by the end of the day, sellers have taken complete control and pushed the price all the way back down. That reversal is a massive sign of weakness. That early morning excitement was a trap, and the buyer's failure is our signal to get ready to sell.
Now listen up, because you could have the best timing in the world, but if you mess up this next part, you are guaranteed to fail. Pillar number 4 is all about money management. This isn't the sexy part, but it's the part that keeps you in the game long enough to win.
So, before I tell you, just take a second to think. With all the thousands of rules and tips out there for traders, what do you think is the single most important one?
There it is, 2%. That's it. Williams is absolutely insistent on this. You never, ever risk more than 2% of your entire account on one trade. This one simple rule means that even if you hit a nasty losing streak, and you will, it won't wipe you out. This is your survival insurance.
And that 2% rule is part of a bigger mindset. First, your number one job is just to survive. That means you have to love taking small losses. Second, you always know where you're getting out before you get in. Have your stop loss set, no exceptions. And third, you only take a trade if the potential profit is way bigger than your potential loss. You've got to put the math on your side.
So this brings us to the very last piece of the puzzle. We've talked about market structure, perfect timing, and managing your money. But there's one final ingredient that ties it all together, the secret that makes all the other secrets actually work. So let's just quickly recap. We've got our 3 pillars for success, right? Understand the market structure, master your timing patterns, and obey your money management rules. That sounds like a pretty solid plan, doesn't it?
Well, here's the kicker. Larry Williams makes it painfully clear that you can know all of this, you can have the most perfect trading plan ever written, and you can still fail, because all of it, every single bit, is totally useless without this one last thing.
Discipline. That's the whole ball game. It's not about being smart. It's about having the mental toughness to follow your own rules every single day without letting fear, greed, or your ego mess things up. It is the bridge between knowing what you should do and actually doing it. And this final quote just nails it. The market is basically a psychological war zone. Its main job is to play with your emotions and trick you into making a mistake. Your discipline is your shield. It's your only real defense against yourself. So, there you have it. The pillars of trading success according to Larry Williams. Structure, timing, money, and the discipline that holds it all together. The only question left is, which one of those pillars are you going to start working on first?